All right, so we're back for another little recap video. I'm going to be recapping Tuesday, Wednesday, Thursday, so these last couple of days. I've actually been away for 2 days, so that's why there was no daily recap videos. Um, I intend to do some more daily recap videos in addition to some educational kind of videos and like tutorials, if you want to call them that, on what's going on and basic stuff with markets and stuff. So let's just jump right into this. I'm going to start with Tuesday, which is like the 26th, I'm pretty sure. Tuesday. And again, this is just kind of like just off the top of my head. I don't really have anything too much planned. I have a little bit of macro stuff to go over, some stuff to keep in mind. But yeah. So today I actually added in this trend line when I got back from my couple of days off. When I mean off, I was away for a couple of days. Uh, we added in this trend line today. I didn't do too much charting over the last couple of days, so I'm just going to be recapping what I've been like the moves I've been kind of taking and what my little predictions are. So Tuesday was kind of a flat day. We actually saw a lot of sell off into the close, which is actually this is a perfect time to get long. Like kind of a perfect time to get long. I'll go into that detail more later. So yeah, um, Tuesday was kind of flat. I tried to do a little bit of day trading. It was pretty flat all day, not too interesting. And then obviously futures rose big time into this supply zone. Now, in the Discord, which is linked below, I highly recommend that you join that Discord. We actually I alerted this play on Tuesday morning. I was fucking away, and this play was, I was working off my phone. We were at the high end of the supply zone. I was like, all right, like, I'm not on equity markets open because I don't trade futures right now. I'm looking to maybe start doing that. I explored that option. I'm going to explore that option because of like these are the plays I've been missing, not doing futures, and I've been mainly sticking to options right now because that's just what I've been doing. But I might have to start doing futures. So the second markets opened, it was like at like nine, maybe nine-ish. I was like, second markets open, we're going to short. We're going to short. At 9:30 when I was like, I'm buying shorts, buying puts, and I'll show you why in a second why that was what we did. But as you can see, this played out just exactly how we thought it was going to play out. Huge sell-off into the morning. V-shaped recovery into the afternoon, which I did not expect this amount of retrace into the afternoon. And obviously today was very choppy. And then we hit this area, and I'm going to talk about this in a second. This area over here in a second. But yeah, I did not expect this retrace. I was kind of caught off guard. We did sell right about here at the bottom. This is obviously the hourly chart, but we did sell here, and I picked up some small longs here, which they played out very well, but I could have gone way more heavily if we expected this much for a retrace, but this was kind of crazy. So, um, so today today was very choppy. Futures were very choppy, and we were kind of like consolidating, and then we kind of did this little breakout. And let's explain what happened. Let's drop it down to the 10-minute. And this thing's like kind of like bugging out of me right now, so if it starts freezing up, I'm sorry. Um, so we came up here, and this is where we kind of had the idea that a reversal was going to happen. See, I don't know why it's doing this. It's like bugging out. When this candle formed, this shooting star at the top, I was like, all right, this was at 1 p.m. I was like, all right, we're definitely going down. I didn't short this. Let me tell you why I didn't short this. I thought this was going to be a pullback here, and then we're going to resume upwards to the supply zone. That's what I was anticipating. That did not happen. And I'll tell you why that did not happen. So right here, this is where I got long today. We came down here. This shooting star formed. This shooting star formed. Double bottom. I was like, oh, perfect. This is a great spot to get long. Make a lower. This is exactly where we were kind of looking. This is where my area, my support line was at, and we didn't break it here. This is my support line to make the higher low. I was like, all right, we're going to resume off here. That was what I was going to thought was going to happen. That did not happen when this kind of story. This story broke at 5:30 p.m. I already know that. But this is basically what happened was this Trump is punishing social media companies and well that's this. There's also another one. Let me see if I can it's not I don't have it pulled open. Maybe it's this one. Oh yeah, this is it. This press conference got announced with China for tomorrow, and that just obliterated. That's what this was. That caused this candle to form. We were up here. I was like, oh yeah, we're doing great. The longs are going great, and then this happened. So we stopped out about here. Right when this line was getting broken, I was like, this is not worth it. This is bad now. So I stopped out here for a very minimal loss today. Obviously, wasn't that great. Still, this play from yesterday, like honestly, a lot of the times when you're going to be day trading options, you might lose a decent amount of the time. I'm not gonna say you lose like majority of the time, but you're gonna lose some of the time. And when you get stopped out, yeah, it sucks. You lose a little bit. You're gonna lose like 5, 10% on the trade. But the trades you win, you're making 500%, 500%. Like, don't if you get stopped out of a trade, especially when this happens, be thankful you got stopped out here and you didn't get out here. Because the trades I got out here were at least worth 80% what I paid for them, 90% what I paid for them. Here they're worthless, these calls. So obviously it sucks to miss this trade, but you live and you learn. Down a little bit today again, and then today I'm gonna go into my play here. Obviously, I bought the dip. Like how could you not buy the dip in this situation right here? I did pick up some airline calls because they were so cheap. I picked up some Micron calls because they were again so cheap, down 6% today. Like crazy talk. An AMD call. So all in all, I spent like maybe like $100 on some calls. Just I wouldn't even call them YOLO plays because they have a decent shot. I think obviously we're kind of trending down right now, but we'll see how markets open tomorrow. I'm not too concerned, but let's go into like maybe some future oh, let's actually go to Nasdaq right now. Nasdaq saw a similar thing again away this week. Didn't have much time to do charting this week, but we saw a similar thing which I'm going to tie into this, and that's how we're going to go into future predictions where we entered this zone up here, the supply zone on Tuesday. We came down, and this was a big sell-off on Wednesday where we had this double top, and then Nvidia was the big play. Nvidia, yep, 1 hour candle right here. So this was pre-market Tuesday. This is 8 a.m. I'm right here. I'm like, oh crap, like this is crazy. Like this is when semis were up in pre-market actually, and we're like here. I'm like, all right, Nvidia is looking to fill this gap, and especially because this is when like the S&P was like right fucking here. Like we were, yeah, we were right here. We were like coming off like the top of the supply zone. Like this was bound to happen. Then we sold off. This was obviously if you played this, this was a crazy play. And yeah, and then obviously we recovered, and this was even a crazier play if you played this, but or you played this. But let's go back to this. So obviously we see. I'm gonna go back to Nasdaq, Nas 500, Nas 100 actually, USD. So look at this. Look at this. Where are we in this range right now? We're at the very top of this range. Where are we at in this range right now? We're actually above it. We're above the range. The range is the purple. I don't know if you can. Oh, in the 10-minute. That's why it's hard. We'll do it this way. The range is these two like if it wants to like move, yeah. So the range is like these side pink. Look above, fail. We're kind of in the same area right here. We could just come down and test this. That's what happened here pretty much. Do I think that's gonna happen? I don't know. China's going to play a large role in what happens here. Also, we do this trend line in today, which was pretty, I think I mentioned that, but yeah. We're going to really have to see tomorrow how this holds, how we get into the open. If we really sell off in the futures and we come down, I'm looking to buy off, I'm down to buy off support and get long off support down here. Tomorrow during the equity session, we'll go over that in the Discord, but we're gonna have to really see how futures pan out. But something to go into would be more of like a leading indicator thing, and I just want to point out a couple things. How cryptos, the dollar, golds, bonds, they all kind of work in an interesting way, and it's just important to notice how we're on the high end of the range here, and these are on the low end of the range. Just something to keep in mind. These could flip, like when they do. They flip because when money comes out of one asset, it often flows into another asset. So that's what causes that kind of inversion to happen. So that's just something to keep in mind. That could be more of like a leading indicator in what's going on. And yeah, let's just go right into some of these macro kind of stuff. So first off, I want to point out that these need some water there. That this month, this is just for May. This is since 2009. This is the highest we've had in bankruptcies filings this month. So the Fed can provide liquidity for the market. It cannot provide solvency for these companies. These companies, if they're drowning in the Fed can't help them with that. Like the bankruptcies are going to happen with or without the Fed help. Well, obviously the Fed can help it, but like they can't provide solvency. So these bankruptcies, if these companies start all going bankrupt, there's not going to be stuff for people to buy. So that's something to keep in mind with the reopening is no matter how much money you pump into people, if there's less things for them to buy, they're just going to buy less because you can artificially create demand. You just give people a ton of money. Now they have a ton of extra money that they can spend. You can create demand like that. You cannot create supply. The Fed just isn't making stuff. The Fed doesn't have back like that. No, you can't artificially create supply. Important. This is something to keep in mind. This could really affect GDP in the future. So obviously we've seen Neiman Marcus, Neiman Marcus, J. Crew, J.C. Penney, like household names go under. So these next two are going to be pretty important. We see a lot of the S&P stocks are actually above their 50-day moving average. I don't know. I'm pretty sure this is a simple moving average. I don't know if it's exponential, but simple moving average is like what I feel like most people use. So a lot of people above their 50, a lot of stocks above their 50, but the 200, we have less than half of stocks above the 200-day moving average, which is still under the 200-day moving average is still weakness. So that's something to keep in mind. That's just another thing to keep in mind. We're going to have to zoom in for this one. So this is hedge funds net buys. So this would be sells, right? Because if they're in parentheses, that's negative, I guess. At least that's the way it works in TOS. And then it's also below zero. So as you can see, hedge funds are selling pretty big right now. So that's another thing to keep in mind. Could you say that this is more of a distribution period with hedge funds selling big? Again, it's just something to keep in mind that hedge funds are selling right now. That's the smart money. And then this is also another thing to be wary of. These last, I don't know, look at this. So this is April, right? Yeah. So April into May, equities were not getting much attention from retail's pockets. It was mainly the fixed income. Fixed income is still majority of it, but equities are starting to get some love from the retail investors. I know everyone's seen the graph of the Robinhood investors, all that kind of stuff, but this is overall where the market's at. You look at January, a lot of equity purchases is like equal with fixed income, and if you combine equities, it's obviously here equities is more, but it's kind of equal fixed income and equities. And obviously here during the drop, everything starts tapering off and fixed income gets more popular. And then here you see equities start showing some love right here. They're getting some more people investing, which I guess could be good for the bullish case. But going back to this, a little more, just recap at the end of the video. Where do I think this is going? We're gonna have to see where futures are going, because right now I can't tell. If futures go up, this is what I'm thinking. If futures go up, they're likely going to try and hit this supply zone if they really go up. And if we open up tomorrow into the supply zone, I see something like this happening again. We're going to sell off in the morning. If we open up, that would trap a lot of bulls. It would trap a lot of bulls and bears because it would weaken bears' confidence and it would strengthen bulls' confidence, both of which would trap the bulls and the bears. So that's one thing. If we go down, I caution for the bear trap. Overall right now, I'm pretty bearish. Although I don't have any shorts right now, I'm just not really holding a lot of positions overnight because it's just way too volatile. You can just there's so much to be done in the day. I'm not holding positions overnight. It's just way too volatile. Obviously today I bought the dip a little bit and I'm holding some small positions overnight, but nothing that's like breaking. So if let's just say we come down to this area, this line overnight, and we make a lower low. And we could easily resume off it tomorrow in the New York session. Now for next week, with the China tensions where they are right now, I think it would be really foolish to get yourself into a big position over the weekend. I think for me personally, unless there's something like groundbreaking happens tomorrow with technical analysis, from a technical analysis standpoint or some shit, or like there's amazing news with China. Like I don't see a reason to get long or short really it's just a really risk to get yourself in a new. If you already have a pre-existing position you've been holding for a while or so, I understand, and I have pre-existing positions I'm holding. But to get yourself into a new position on Friday and hold it through the weekend is incredibly risky, and I would caution against that. But yeah, hope you liked the video. If you have any questions, I'd love to hear any kind of arguments to what I've said, anything good, anything bad. Join the Discord, great stuff happening there, and yeah, I'll catch you all later.